Greetings, market rebels. Welcome to this week's sector situation. I'm Wayne, my partner, Ryan, already got the market outlook out that I record. I'm sorry. Yeah, he did. He recorded he got the market outlook out before I could finish recording macro measure. So he's a little bit earlier than I thought he would be, but that's okay. All the links should eventually work once the videos are uploaded. And with that, let's get into it. Excuse me, a little cold here. Here's our trustee disclaimer. I need everyone to take a quick look at, and then please take a look at the intellectual property rights notice. And that should do it there. Now I can stop the share and then restart the share over on the right screen, which should be here. Let's see if that works. It looks like it is working. All right, good. So that's good. Let's see if I can minimize that. Get that out of my way. Yep. So, boy, I did forget one thing in macro measure, which is that, we've got this debt ceiling thing. There's always big talk, and normally that's all it really is. But I guess you never know. But excuse me, I was looking out and saying, okay, where do we go from here? And I think the biggest thing that I can note right now, and this is probably going to be a short sector situation. If I jump over here, just to quickly set the stage for us, SPY, there we go. This is sort of what we expected overall last week, macro measure wise. Think how this would probably try to move up and break out. It did, it got above the 200, but the thing is that depending on whether you look at the SPY, the Qs, the IWM, or the diamonds, everything pretty much finished either overbought or close to overbought in the short term. And the way that I check that out is through what I call the heavier duty intraday chart. So if you're wondering what's he talking about, and I'm talking about things like the 4-hour chart, the 2-hour chart that you can check out on Thinkorswim, and those RSI readings on those are pretty high. They're up, either some of them are at high 60s, middle 60s, high 60s, over 70. It really depends on what you look at, but that's really in the main index ETFs, major index ETFs, but they're also the same really in some of these sectors, right? So I'll flash some of those off when we go through them. But the big note from sectors in my book was that kind of that rotation we talked about, where things like XLP did not have a very good week, right? Where they started rotating back to more of a risk on kind of a look. And then the best way to see that probably would be like, just check out XLP, how the staples really didn't do all that well. And then look at how discretionary did. And things came roaring back in real estate land. Basic materials, as if things are really gearing up, they roared back. XLI came roaring back. Let's see, XLF, the earnings were what they were. They did a nice little maneuver there to work them down, but that ended up having a strong week. XLC Communications, you could see all these were, well, XLK and then energy even, right? So I'll go through them all. I'll tell everyone what I think. We'll check out our others that are not on this grid. And then I guess we'll see what else comes to mind and then wrap things up. But I'm going to bring up my basic chart and we'll take a look at, if it lets me do this. Let's move this guy out of the way so I can see what's going on here. And then I'm going to take a look at XLE. So I'll give you some data on that, just kind of quick assessment, if I can get it to be accepted. All right, there we go. So here we are, and really we don't have a major reading. I'll have to put an RSI box on here the more I think about it. But RSI on here is at 60 on a daily closing basis, right? On a daily and on a closing basis. But to give you an example, it is on the 1 hour, it's at 67. On the 2 hour, it's about 67-ish, right near there. So it's a little short-term overbought, but I think this looks better. I think you can tell, right, overall uptrend, strong push here. We were fortunate. We kind of spotted that this could be happening, got out of the way to an extent. It pulled back, found support at the 100, found support at the 100, found support at the 100, right? So that's that obviously that grayish white line. So that's pretty good if you're a bull, that you have this big run, gives you a nice pullback, and you take some of that overboughtness out, consolidates. Now it's looking like it's starting to try to put another run together. It's just that it is a little short-term overbought, not super overbought, or it's kind of approaching overbought. But I think this sector is firmly in control of the bulls now. The question would come back if you start falling back below the 50. But I think the bulls have really kind of grasped control of this again. It's sort of across the board control, but it's a little shaky because they've just been able to get back above here. Now we have to see if they do more with it. And then we'll, the more they can do, the more we'll give them the benefit of the doubt. But that's where things stand. So again, I said this in macro measure, hate to repeat myself, but there's a lot of overlap. If I came in long in sectors that are overbought that we're looking at, I'd still ride them if the market's working, but I'm going to move up my stop level pretty aggressively, or I'm going to certainly roll up my contracts to probably a slightly out of the money strike if I'm extremely overbought. And when I've seen this, not quite where we are, I've seen more overbought readings intraday on some of these heavier duty timeframes. That generally does precede some kind of a pullback, not by much. I don't mean by like weeks. I'm talking about, maybe like a day, or sometimes just within a few hours. So just keep that in mind if we open up on Tuesday that way. Let's see here. This one, XLK, we are on, I'll pick one out. 2 hour is at 70 on my RSI reading. So mine are a little different, but it's pretty close overall. So there you have it. Overbought, looking better. You can see the cup and handle in there, I think, pretty clearly. Cup, I made it clear, and then made it unclear pretty quickly. But there's your cup, and then of course there's your little handle. And this could go through that 200. That would be the start of something much like what we see in SPY and so on and so forth. But that would certainly be better. But they've got this kind of cluster low. They double bottom, mini double bottom. They put in higher lows. They're basically making higher highs. So they're looking to do something with that. So that could obviously really help if they start coming in for especially mega cap tech. So some of those stocks do look like they're short-term overbought but want to move higher. But I would say this is on its way to being in firmer bull control. I would say that jury's a little bit more out on this one, but I'd say, look, I'll give the nod to the bulls because of the market we're in right now, that it's probably not firmly in bull control, but it seems like it's on its way to trying to be deeper or further into bull control, but still overbought on the 2 hour. Be careful. XLC communications, those have roared back. You could see how really there's only been one or two little days in the last few weeks that haven't been that good, but otherwise really good. And naturally, because it's done so well without backing off all that much, you're looking at 75 RSI on the 2 hour, and you're looking at 72 or 73 RSI on the 4 hour. So overbought, at a resistance level in the form of the 150, did take out highs. Wouldn't be crazy after the long sort of strong run that it's had for this to find a way to pull back a little bit. I mean, that would be now that debt ceiling thing could maybe be the scare factor they use. There's my support line, pretty close anyway. So, we would probably want to see it support there. It wouldn't be the end of the world if it dropped down to the 100, the dash white gray line, but you want to see it support somewhere near here if you're a bull. Mild pullback, hold above this low, and then try to take out this high that if we do pull back immediately and then work its way back up to the 200. But that would be a good sign, right? Higher low, and then taking out all these highs. That would be really good. But I think it's a little bit short-term overbought now. Doesn't mean it can't go. I'm just saying that this is the way we are coming into the week, and you have to just manage accordingly. XLF, another one that's been ripping. They had a really wild day in there on Friday. You could see that kind of bullish engulfing or bullish outside day for just line or bar chart players. But here's one to throw at you: 74 on the RSI on the 2-hour. So it's up there. 70 on the 4-hour. Just keep that in mind. That's where you are. Been a strong run. I do think the bulls are firmly in control of that sector as of now. So I'm more inclined when it looks that way to be a long side trader, A, and B, I'm more inclined to be a person who is aggressively looking to buy the pullback. But just on an important note, I am not someone who buys at a level. I really want to see the momentum shift back towards the direction of the trend. I wait for that to happen. So I'm not really a levels buyer unless I'm positioning for long term, and then I become more of a little bit more of a levels buyer, where I'm fine buying and partially my way in with purchases that are only part of what I plan to add ultimately. XTN, transports, financials, important sectors. Obviously, technology is, obviously the earnings are. And this is where we laid out things last week or recently about what we'd like to see, where you work your way up, come back, test that 200-day, and then go. We ran out of room. That's why we couldn't really draw that one properly. But that's kind of what I've been thinking overall for the whole market, that it would try to do that, get above that resistance line, burst out, and then they'll try to maybe test that, see if they can hold that. And like I said on Cocktail Hour, as AJ's sort of popularized it at Market Rebellion, he calls it role reversal. I've always just called it conversion. But whatever works for you, works for you. Here's the old cup and handle-ish appearance there. So, I have respect for cup and handle patterns in my time. I think they're pretty reliable, and they do produce moves. And there's a gap up here to work with. There's another gap up here. In the way that materials and industrials are rolling, I really wouldn't want to get in the way of this one either. So negative problem, or I should say negative side of things, right? It's mostly in bull control, not fully, needs to really break out. I think but the problem is it's overbought, right? Right now it's just 2-hour, 4-hour, they're well above 70. In fact, the 2 hours near 80. So that's a lot of, that's a lot that's happened. You can see that's been a very strong run. So if I'm a bull, I'm not going to complain if it keeps going up, but I feel better about it as a trade, right? If it pulled back a little bit and then maybe just pulled back, maybe even scared people below the 200-day, flushed some people out, and then started to take it back up. But overall, I think you have to like what you see there. And that is almost leading, in terms of its price action, in terms of what I think we've been looking at for the last, say, I think 2 weeks, in terms of possibly the market busting through resistance, pulling back, and then maybe going. The only difference here is that this is not really taking out critical highs yet, but the market really isn't. If you look at the SPYs, it might be in terms of IWM and maybe DIA. You want to look at other indices or or index ETFs, I should say. Let's see. Next one would be the healthcare, and this one was more of a was working well when the defensive ones were. It isn't really working well now, but it could end up being, overall, where I think it's still overall bullish at this moment. But I think, clearly, if this low doesn't hold, then you start thinking about, hey, if it drops below, say, 133, this thing could easily visit down here, because you've got these other SMAs rolling over. So we're kind of where we were on the market, where I think you've got to wait for this to break up and see if it joins in the market rally, if the market rally sustains itself. But it did kind of pull away from it and get out of the imminent danger zone there, where it kind of was on Thursday, but definitely not out of the woods yet completely with these downsloping SMAs. Even the 20s downsloping and crossing the 50, which is the gold line. For some, that's I guess they call that more of a death cross. I don't really get that dramatic about it, because that isn't really a critical thing for me. I have other things that I prefer to focus on more than that. But I think, I think you're looking at probably 136 and change. And if you want to be a little more conservative, up here at that 137.11, but that's what I'd wait on. It's not so overbought. It's kind of like RSI neutral. I'd give the bulls slightly more because of the incoming trend and a couple of other reasons. I give the bulls the benefit of the doubt there. And one of those would, of course, be that the market is trying to act better, but still did better when it was kind of working with some of the other more defensive sectors. And we saw that in the J&J chart. We looked at it towards the end of macro measure, that it's a little bit on the rocks. Here's your staples, as we said. They're also looking a little more concerning. I do think that the bulls are still holding on to most of the control here. This does not seem all that bad on your RSIs. It makes sense, right? It didn't really jam the way a lot of sectors did. And it's really a lot like the XLV, where, okay, I'm willing to give the bulls the benefit of the doubt for now, but they're not that far away from having me question their moxie at this point. So it's very clear that 200 there in purple has been a big deal. And so that just about at that level. So let's call it 73. It holds above 73. Okay. If not, there's a gap down here. They could rotate out of these staples in a big way. So, I think if it gives away on the purple, then you trade down to the rust and white. It's only a few dollars. It's probably only like 3 or 4% lower, but maybe 2 to 3% lower. But whatever it is what it is. And maybe this needs to come down more and dawdle around before it forms more of a deeper shoulder, kind of like this shoulder over here to this head to maybe another shoulder. So maybe that's tracing out an even larger viewed inverted head and shoulders or inverse head and shoulders. But I think what's happening is just clear that they're rotating into the riskier stuff. They think they want to front run the Fed pause, it seems to me. That I don't think that's breaking news to anyone by saying that. And that's their strategy. I don't know. I think we always have to go with whatever is going to happen as shorter term traders, and even to adjust as someone that holds positions. I always think you can, if you look at this stuff objectively, you can adjust your longer term stuff and neutralize a lot of risk, and then wait for the technical signs to favor you to really get aggressive again. We talk about that kind of stuff a lot, but this stuff, this is looking better. They saved it big time on Friday. You know what? It took the wrong. I don't know why it took that. I thought I had XL. I'm like, wait, this looks a lot like. There it goes. Yeah, I was gonna say it looks a lot like XLF because it was. Wait a minute. There we go. But yeah, they had this run, and you can see versus staples, which pulled off, and it did close on the high of the week. It's above the 50 now. Short-term SMA starting to pull up and slope up a little bit, but you have the lowest low here, and you haven't taken out any highs, and the trend is still down, and there's your 200 day. So this is sort of lagging behind, I think, the index ETFs even, because it's just not close enough to there. So I can understand that, that there are some people that still are concerned about the macro situation in the US economy. That makes sense. And they maybe haven't rotated back into the discretionary names so quickly. Real estate. Oh, let me go back there on just get you some RSIs on that one and kind of control talk. I would say intraday, it got there. We're at 70 on the 4 hour. We're at 74 on the 2 hour on my RSI calculation, which is a little different, just slightly different. So, just be careful. That's overbought intraday. Again, may need a breather. I would say, look, the bulls are still in control of that. We're on XLF. Yeah, XLF. I don't know how we got back there. I meant to do XLY. Geez, I'm really having a hard time. I apologize. But XLY, my gosh, 75 on the 2 hour. So yeah, that's really getting up there. 4 hour, just a little bit under 69. So that's rough. Now, this is starting to get closer to bull control, but ultimately bears are still in control of this one, the way I view things. And so I'm not willing to give it the benefit of the doubt so much compared to other sectors that are looking a lot better. It needs to do work to really bust out of this whole dynamic that's had it in its grasp or control for a long time. But that's if you look at that, which we should, and that's a pretty serious correction, right? It's not quite dropping in half, from the highs. But yeah, that's really gotten rocked. So just gives you an idea. So it's been a long downtrend in those discretionary names. XLRE, where are we on that? That is at the 150. Clearly very close to taking a critical level. If it does, then with a higher kind of cluster low versus back here, higher highs, trying to now add another high to the mix. I think you're looking at intraday, you're in your mid to high 60s on RSI on the intraday heavy duty time frame. So that's concerning, just like everything else. But I think, that we can all see that, right? You get through here on this chart right now, and without going too far back, but if you get through here, there's not a lot of resistance until you work your way towards that 200. Not that it's that far away, but you would think that a shot at the 200's pretty realistic. So that's about what almost a 4% move. But that's looking better. I think bulls are close to really taking full control there. I would say, like, look, if they get it above the 200, they hold it there, you've got to give them their due, much like the market at that point. And I don't think a lot of this makes sense in the here and now. My take, I talked about it briefly in macro measure. My kind of gut take on it is they're getting, these bulls, I think, are getting ahead of themselves. And I do think that the Fed will, if the economy stays buoyant, the markets stay buoyant, they'll just leave rates there for a while if it's not hurting anything, and they'll probably try to use those so-called stable conditions to reduce their balance sheet, and that's going to be a drain of liquidity, and at least in theory. And the drain of liquidity, in my experience, has been bearish, whereas adding liquidity has been bullish for stocks in my career for over the last 3 decades. So it is what it is. I'm just sharing my take, my experiences. Inverted HNS, everybody can see that. Here you go, and then there you have it. So you've got that. Oh, I don't have my cursor there. I think with the dog kind of not doing well and just under the weather, I've had to shut my last video down pretty quickly and just trying to get my mind back into where I was and just kind of skipping things. I apologize. It's just been a little bit of a curveball, but this is, with that kind of move that XLB made, this is really overbought at this point on the intradays. I mean, even here on the dailies, it's at about 67. If we round it up, on the intradays, it's some of them, at least, it's in the mid 70s. So the heavy duty ones, like the 2 hour. So, that's up there. I mean, that's definitely breather material. The RSI reading on the daily 67, you come back to some of these former highs, it was even higher. So, but this is an area that's kind of sent it packing before. What would we do if we wanted to trade this particular ETF? We don't really trade this. It's not what I would think is a big trader. You might be able to look at your components, but I think if you can't hold that support line, probably right, you probably would say there's a flat line somewhere near right about there at 82. Let's just say 82 and round it off. And so if it starts dropping below 82, it probably backs up a little bit, probably down to 81 would be my 81-ish, believe it or not. And then your 50-day and all that 20-day are all waiting for it, another dollar lower pretty much. So it's not a big mover, but that it is what it is. I mean, they went back in there as if like things are gearing up. Maybe that's the China talk. I don't know if it's even legitimate, but that might be the reason why the people are starting to think that China is about to ramp things up. Kind of a strange looking kind of teacup with a handle, a little bit there. If you want to force that, has that real potential. I guess can't rule out a melt up in this market. Maybe there's just this undying belief in soft landing, pause by the Fed, whatever. Maybe we get that for a few months. I still have a hard time believing that it's over. Could be, right? We have to trade what's in front of us anyway. But right now, this one 67 on, 66 on the 2 hour RSI to give you an idea. And you're 64 on the daily. on mine at least. So, you're getting up there and you're right near resistance, right? So, handle with care, handle your long side plays with care, because this is another one that may need to back off before it tries to go. And don't rule out that there could be some tops on all these things we're talking about, right? That if these things can't bust through and start to retreat, and then there's, let's say, bad news that develops, we could end up with the second high versus this group of highs here, and then maybe you have another corrective phase, right? If it fails to break out. But yeah, I think it's getting dangerous there. Overall, it's in bull control, just like XLB. They're both firmly in bull control, so I wouldn't fight against them without a short leash, right? If the market's jamming, I'm not going to overstay my welcome as a short in those things. XLU, as we always tend to mention, it's, risk on, risk off, interest rate sensitive, the whole works, not showing us much of late. But I mean, just going back down a little bit, has a lower high versus here, but not a lot to really work with there. RSI middle of the road, as you'd expect it to be, not too much to mention. But, this falling out of favor, this tends to be defensive, and they bid this up when they're more concerned. You just need to go back to the post earnings season situation we saw in the market, and you could see that when the market was struggling, this was doing, initially at least, doing better. Defensive sector. Let's take a look at some of the other ones we look at, and of course I like to start out with the semis. Those are a very important sector in the modern world. They've been in control of bulls for a while. The bulls are really close. I think if they finish this month strongly, they could really be in serious control again. And you can see the cup and handle-ish type, I say, situation, maybe not textbook, but it sort of has that resemblance. And it's back above the 200. There was some really decent buying that happened there last week. You're above all SMAs. You're turning a lot of the shorties back up, trying to reverse the trend. But clearly, it needs to take out these levels, take out some of these former highs to feel better that a whole nother leg could maybe be developing to the upside. Problem is, the 2 hours at 76 on the RSI, and you're at 4 on my daily right here. So that's getting there, not quite there, but getting there. So I'd be a little concerned about that in terms of just like a lot of these other sectors. But if the bulls can finish this month strongly, they'll be back in control of that sector, and that could mean really good things for the market if the semis are off to the races again. The closer look, we looked at real estate. We'll look at housing. Another one that maybe is enjoying the fact that the rates have fallen off a little bit, but XHB, excuse me, you can't really like the way that this finished outside of Bollinger Bands, but they're narrow. But the reason I say you can't like where it finished is because it's got a 77 reading on the 2 hour, and on the 4 hour it's about 73. So it's overbought even on the daily. You was 71 on the daily. So look, it's overbought, and it's been mainly in bull control now for quite a while, and they made quite a move with it. So I think this is due to pull back a little bit. If I were long it, I would do what I've been saying in both videos. I would be very prudent about it. I'd be all over it, edge of my seat all over, ready to do something if it can't hold on and maintain momentum. Roll up, right? I would probably over roll at this point if I've been riding it, because that's really a nice move there in about 2 weeks. Not that it can't do more, but right, we just know that you probably really do for some kind of a little pullback in here, and then try to get your mojo back and go again if this if they're going to try to convert this thing back into a bull market environment. But just short-term overbought overall, back in bull control, especially if they find a way to close the month strongly. So again, this makes no sense to me, but we make money from stock price changes, differences in stock prices, and of course the option prices from when we get in to when we get out. So I don't, my opinion, I don't care about when this thing's showing me this and it's running, right? I'm going to use the technicals to try to help me profit from that, not not fight against it. Let's see. Oh yeah, XAU. Let's take a look at XAU. So I'm getting a little nervous because we've had trades in this one, like NUGT. I can't think of all the other ones we've had in here, but I'm getting worried because the RSI readings were all sort of like heavy duty intradays, and you're outside of your Bollinger Band. It's not a big deal at sometimes, right, when the bands are kind of narrow, but you're kind of stretched here now with widening bands that are fairly wide. And so that's a little worrisome to me with the RSI really up there. So we've been bulls on this. I'm a little concerned that it's getting too popular. I'm a little concerned that it's taking out this high. I'm kind of cheering, honestly, for this to drop back down dramatically. Not that would hurt. I hope that wouldn't hurt anyone, but I really would love to be able to buy more than I did in here during this phase. But you can't always get what you want. I say it every week, but I'm worried about that one right now because it's stretched. It's in bull control. There's just no way to argue that it's not. But this could end up being a cup. We might end up being treated to more of a handle. We don't know. If it stops and reverses here, that could certainly be a possibility. But it's probably, let me look at one other chart off screen if I can here, because this could maybe help us out a little bit. Is it this one? It is that one. So I'm off screen, so just bear with me. But this is the most stretched it's been from some of its moving averages that it's been in a while. I mean, so I would keep that in mind because you've got to go back probably you've got to go back a couple of into what day is that? Really, you got to go back about to the somewhere in 2020. So on some measures right now. So it's definitely stretched there. This is one where if you're in any of the UOA Pro ideas, especially that we put in for that, I would definitely roll dramatically. If I'm in whatever the 130s, I would roll this point to the 137s or the 138s or whatever's available. But I would want to be above this action if wanting to stay in. And just go ahead and put a nice little support line in this case right there. And it's pretty steep. It's pretty steep. So be careful in that one. Overall, long-term control by bulls right now, but definitely had its run. In fact, let's take a quick look at the TNX. I think I might have skipped that in macro measure because it hasn't been as important in a way. It's been sort of drifting lower. We'll have to see what happens there. But it's definitely probably that's kind of on the ropes there, you would have to say, right? You have this kind of push lower, this kind of a reaction to that, and now you're back where you were on these lows. So if that gives way, then rates decline more. It probably helps the market. That's the way the markets are treating things. So it is what it is. So just keep that in mind, that rates are down. The dollar's been weakening. VIX, we didn't cover that. It's another thing because of the little sick dog issue that I had. But VIX really, you can see you got to go back a whole year to find a level that matches this one, literally to the day on the 13th. So it gets lower, and I wouldn't rule that out. But if you've been waiting for a while because you might want to start acquiring some volatility, maybe starting to partial your way in if it's something you've been thinking about. Let's go over to the oil situation. We should have probably done this when we were on XLA, but like I said, I'm a little out of sorts with what developed with the dog there. And it did switch over on me to percent interest. I got a lot of stuff working against me right now. And we've been saying, like, what's up? Something's got to happen. It seems like XLE keeps trying to go higher, and this really hasn't responded. But now it's looking a little bit better. We have to give it its due. Higher low, right on the verge of making, maybe if it takes out these highs, that would be really good. So if it can make a trip up to the 100, back off a little bit from there, maybe and then push through, that could really be a good sign for the energy stocks. And we do tend to have a lot of UOA when energy is rolling. So I hope we have some ideas in right now. We've had rig and other things, but they were really nice little finds by our UOA team, but hasn't gone bonkers. So maybe they're waiting for the crude futures to break out, but it looks pretty good. As far as looking at this on maybe more of an intraday RSI basis, it too is overbought though. So that's the caveat. It's definitely short term overbought. I don't think anything's wrong with it on the daily at all yet. It's probably like middle of the range. Yeah, and you can see 50, 57-ish if I mouse over it, but 58, but it's just short term overbought. So it's just kind of, I think you just got to be careful coming into this week. This week's been, and this week could be a challenging one because of where we're ending up. Let's see where things are. So maybe this future overtook the Fed future. That's the thing. Like, I don't know now, but we're looking at the March futures for random length lumber, and kind of the way XHB has been working. Like, you could see this is definitely working better, a little bit better here. So got to give it its due, but this did finish out on the week on overbought status on some of your heavier duty intraday time frames. So just keep that in mind. And naturally, it's been in bear control, and its bears are probably barely clinging right now. I mean, it's pretty much, if it finishes like one more strong week in here, I'd probably have to say, look, the bulls have assumed control again. And the one other interesting thing would be the copper futures, because we've been looking at these for a while too. We added these to our mix, and we were noting that these were doing better, and so you in terms of your industrials, your basic materials, this is there's demand or something that's been anticipated. Now you can see it's gotten a little overextended with respect to the Bollinger Bands right there. It's outside of the bands. They were narrow there. So maybe it's gotten a little haywire a little too quickly. Maybe you do need to see some corrective activity, I say, trying to draw a support line here for us, give us an idea. But yeah, I could switch me over to percent again. I could see a little pullback there, given that little jam. That was a pretty decent jam over the last 7 days, bull control there. But maybe come back, maybe touch somewhere near with a form of resistance that really catapulted it once it finally blew through there. See if it can come back a little bit, maybe see if it holds. Again, AJ tends to refer to this as role reversal. I've always called it conversion, as in converting from resistance to support in this case. But above all, your SMAs, the shorties are all upsloping. This is really trying to change, and we noted that for a while, that it's been trying to put in these higher highs, higher lows, and that just keep going back there every week, reviewing things, and you'll spot these things as they're happening. And this might not really mean anything other than macro. I don't know if you could do big trading on it. There's probably better copper names but we did have some FCX paper that we put in for a bull trade. It too a little bit overdone now though, just to kind of sidebar there, but that is what it is. And then what else do I have that I wanted to try to bring up? I think I'm going to stay away from all the other things that we've checked out at times, just to keep this a reasonable rotation around the sectors for a change. But I just to kind of go back to it, I think the market ended up in an overbought state on the short-term the heavier duty intraday. So it's short-term overbought in my book. I do still think that it tried to emerge from the base camp that we've been calling it here in this rectangle for a while. We've been calling that it did finally start after sort of suggesting that it may do that as the prior week closed out. It did do that this week. Unfortunately, right, did get to the 200. We thought it got close enough. It probably would try to knock on that door. It did, closed above there. Great. But this is the bear market resistance lineup here. There's the debt ceiling. There's not a lot of earnings in econ out, but there will be Fed folks, I guess. And then we've got the lead up to the Fed. in a couple of weeks that will start. We've got more earnings that will start hitting, more economic data that will hit. But you finished, just to throw it at you here in sector situation, you finished about 72 on my RSI on the 2-hour. So it's not terrible, but the market, because I usually refer to the SPX, SPY as my best representation of the market. I think a lot of folks do that. So, I'm part of that gang, I guess. But yeah, I mean, I think you have to just acknowledge it for what it is. Doesn't mean we can't just go. I just think my best suggestion, I think, would be just be smart about how you manage your positions. And you'll be shocked if I think you'll be shocked if you're new to this stuff. If you monitor their stuff and realize, like, when a lot of this stuff gets frothy on these heavy duty intradays, I should probably be managing my position accordingly. I think you'll see that pays off a lot more than it doesn't. So that would be my best thing to say. But right now, I'm calling it more of a cup and handle that's in place here. I'm really more of a long-term bear. Don't trade it that way. Remember, we're swing trading here, and I manage according to what I see now. I do think there's a chance that if they do push this through the way that things are shaping up, they could have a couple of months, 2 to maybe 6 months of trying to work this market higher. Don't know. I mean, but I wouldn't fight against it. We're going to go with it. In the services that we manage, we always go with them, where we see the technicals, where they tell us that the things are headed. And we worry about managing things according to the technicals as well. So we're just going to keep adapting to what unfolds. But on a bigger macro picture, maybe that's why a lot of these risk-on sectors took the complexion on that they did this week. I think they're ahead of themselves, the market's ahead of itself. So could be a little bit of a boring week in terms of like, hey, we don't jam again. But maybe you get a little back and fill. Maybe you trade for singles and doubles. Maybe that sets the market up for a better run the following week when there's more earnings coming out and the Fed would then be on the table. I think that, just a week away at that point. So it might be the impetus for these guys to get excited. They only get the 0.25 basis point rate hike that Bostic said he might favor now. So there you have it. I'll try to get things a little more organized next time, just trying to get my head back into everything after getting the dog behind me in macro measure towards the end of where it just didn't feel well, and I had to go try to see what I could do to help out. Nothing major though. No worries on the dog front for you animal lovers. So thanks for tuning in. I hope something I've shared with you helps you this upcoming week or in the future. And we'll be in touch through our updates and Rebel Pit and the newsletters and so on and so forth. Thank you.